You are transacting on the world's most precious digital real estate
Mhm.
on the most secure network in the world, and you're used to it being free and available whenever you want. I'm sorry, that's not the long-term vision. Those that try to preserve that, I think, are fighting the growth and fighting global adoption.
I don't think it's unreasonable for there to be growing pains with something that goes from nothing to a couple trillion in just over a decade. And it's the stage of any company, organization. There's the early product, there's the renegade cycle where you're rebelling against everything. And at a certain point, you hit the scale where you are the incumbent, you are needing to serve as many people as possible. Welcome back to Hosting Bitcoin, where we explore the builders, thinkers, and pioneers shaping the future of decentralized infrastructure and personal freedom. Today's guest is someone who's been around the block not just in Bitcoin, but also in technology, leadership, and what it means to live and build with intention. Bob Burnett is the founder of Barefoot Mining, a Bitcoin mining company based around decentralized mining development and very unique site structures. With a background in high level technology and a leader in the personal computing revolution, as well as a deep calling toward decentralization, Bob walked away from the corporate world to build something different in barefoot mining and his contributions in the Bitcoin space. In a world that's overrun by noise, speed, and scale, Bob's work invites us to ask a deeper question. What are we actually trying to build, and who are we actually looking to serve? Mr. Bob Burnett, welcome to Hosting Bitcoin.
Hi, folks. So nice to see you.
There's a lot that I want to talk with you about, but just for the benefit of people who haven't heard from you yet, could you give the audience a little bit of your background? You've been in technology for a long time. You've seen many things other than just Bitcoin. And so I would love to paint the picture of what your previous experience in technology has been to date.
Sure, sure. So I guess I've been a nerd for a long time, and probably starting in the late 70s. So probably predating the birth of most people. I started working with personal computers, and eventually I got my degree in computer engineering and went to work for a company called Zenith, which, if you're older, you'd remember as really the last great American TV brand, where TVs were still made in America. But they had a personal computer division. And so I went to work there, ended up spending the next 20 some years in the personal computer in industry, probably most notably as the chief technical officer for Gateway. I spent 13 years there and was a wonderful ride. Again, for if you're younger, you may not know Gateway, but in the 90s, we were one of the top five personal computer companies in the world. We were a Fortune 200 company. So this, like in the year 2000, we did 10 billion in revenue, a billion in profit. We made 10 million PCs a year, just to give some scale for folks. And desktop servers, laptops. I designed TVs and MP3 players and digital cameras and all that sort of stuff as well. So I got to kind of feel through the whole consumer electronics space. And after doing that, I opened a an incubator firm for technology companies in South Dakota, which there weren't many, but there were people who wanted to try, mainly because Gateway was kind of on the downside, and so there was a lot of people from that area of the country that didn't want to go live in Silicon Valley or Texas, and wanted to stay in that region. And so we had some real talent. So we created an incubator to kind of help foster those. And then eventually that led me to this world in 2017, when I got a phone call from an ex Gateway person who said, "Hey, Bob, I need some Ethereum mining servers." He was putting up a farm in very early days, pretty progressive at the time, even though it was Ethereum, where he wanted to build 800 Ethereum mining servers. This was like 8 GPUs per server. And so we started what we now would know as barefoot mining to fulfill that, to design those and build those servers and fulfill that order. And what ended up happening was, after fulfilling that order, which was pretty lucrative for us, we we said, hey, we have this design, and we can get more NVIDIA chips, which was hard to do in that period. Still's hard. And started offering it to other people. Well, the next group of people that we started talking to were people who said, well, I'll buy some, but only if you host it for us. So that got us into hosting. And then we started saying, well, they're actually making a lot of money. Maybe we should shift and take our profits and pour it into our own mining equipment, which we did. But then that, we didn't really ask me my Bitcoin journey, but I'll kind of tell you it anyway. And that's where my Bitcoin journey kind of starts, because at that point, my mind shifted from a computer guy who was building computers and selling them and looking at that as my revenue source to essentially mining. I was making my revenue from mining, and I said, well, what is this Ethereum thing? I really hadn't investigated it a lot. No, it was probably 2018. And I dug into it, and I saw a lot of warts. There were a lot of things about Ethereum that bothered me. Well, first and foremost was there was a known plan to move away from proof of work, which was to obsolete my business. So that was part of the impetus. But it went deeper than that when I realized, well, what really is proof of work? What is proof of stake? Why was proof of work superior? Is Ethereum really decentralized? The answer is no, it's not. And the fixed money supply and these sort of attributes led me to Bitcoin. So we pivoted the company kind of through 2018, so that by the roughly the next year, everything we were doing was Bitcoin oriented. So I answered questions you didn't ask, but I have a tendency to do that. So
That was going to be a question anyway. And it's funny too. I mean, that's partially my road into Bitcoin was through Ethereum as kind of the first major exposure. And it wasn't
yeah.
until, I mean, there were years that I was holding that as many people would say, it's got more utility, it's got more use cases. And it
Mm-hmm.
wasn't until 2021 that I realized, oh, this doesn't have a future in some sense. I mean, proof of work is a really important component of these networks,
Yeah.
and that whole class of the network is just being destroyed overnight. It was kind of a wild concept to me that you could just kill an aspect of the network without any sort of vote from the people who have contributed lots of time, energy, resources, infrastructure to building it over the course of those years. That was a big red flag, and the reason that I fully went into Bitcoin.
Yeah. Well, it leads to it's a very easy logical progression that you went through to say, well, what is proof of work? I like proof of work. Why are they changing? There's no community consensus. There seems to be like one guy or maybe a small group of people who have the authority essentially to change the protocol. And they did. And they've done it several times since subsequently. And, the word hard fork, I don't think we have to, it has a negative connotation. I think we have to be careful about saying it's always negative, because we will face some at some point in the Bitcoin community, for most likely for things like the time issue. And there's a few things within Bitcoin that will probably force that. But forks are generally not something that are positive generally, and hard forks, which means a mandatory upgrade for those less familiar. A soft fork, basically, you can think of a soft fork as an optional upgrade or an optional change, and a hard fork as a mandatory one. And Ethereum went through that, and there was a class of people, by the way, in Ethereum, for history's sake, that didn't go that way. And there's something called Ethereum Classic. It still exists, and if you're out there trying to mine Ethereum, that's what you're doing. And we had this equipment. We tried to do it for a while in the end, but it ended up not being profitable. And we went through this transition period, like in full transparency to people, that like, hey, we were mining Ethereum and converting it to Bitcoin. or cash. I mean, we had to either convert it to pay bills, or to the degree we were able to, retain it, we were converting it to Bitcoin and holding Bitcoin. And we did pretty well with that until that equipment, ran out of gas and the hard fork of Ethereum happened. But like you said, I think the big thing was, while we have issues within the Bitcoin community today and we're battling over certain issues, the fact that we are battling over those issues is still evidence that we are largely decentralized. And we have to fight to keep that decentralization so that it's not one small group or one person that can make these kind of changes, that it,
Mhm.
it truly is a consensus of the community.
And there's so many reasons why building in this community and on this network is different than anything else before. But I'm curious, from your vantage point, you mentioned that when you're at Gateway, you're up to $10 billion in revenue, which is a good portion, almost half of, a little more than half of all of the mining industry revenues annually.
Correct. Yeah.
So the entire industry is about the size right now, or a little bit larger than a company that you were previously a large part of in leadership on. What what is it about this industry that you feel you have a unique vantage point on, just having seen the life cycle of early stage technology that's going through huge evolution? Like what do most of us not appreciate about where we are in time with this network?
Well, I think what the experience gave me was, seeing something that I believe that the personal computer has largely been overlooked on the impact that it had on society. It kind of got overwhelmed by the internet. But so in other words, I think when people look for ancillary ancillary anecdotes or examples of, Bitcoin is here in its adoption cycle and things like that, most people think about the internet, but I think the personal computer was equal, if not more important. And let me start with that. So, what was the impact of the personal computer on society? It was the decentralization of computing. Now, this is probably difficult if you're younger than 50 to completely understand, but prior to the mid 80s being maybe the earliest point of inflection, getting access to a computer was a permissioned service. So your school may have had a computer, your company may have had a computer, you may have had a terminal, but literally to get access to the computer was something that you had to have permission to. If you were a programmer and you wanted to run a program, you had to seek somebody's permission
Hmm.
to do that. And what the personal computer did was it moved that to the individual, to the home. And that was a radical concept. And the internet sits on the back of that, right? The internet was that. And in a massive burst of creativity in 1980, let's say just prior to, I think, what we would consider the inflection point, there were no spreadsheets, there was no PowerPoint, there were no search engines, there were there were probably some basic computer games that were, like almost Pongish kind of computer games, if you're old enough to know what that is. But really, there was nothing, and it wasn't until the personal computer caused the decentralization of computing that it spawned the innovation of all the things that we now do with a computer. So, um, when I look at Bitcoin, Bitcoin is the decentralization of money. The internet, you probably say, is the decentralization of information.
Hmm.
Um, uh, is artificial intelligence the decentralization of intelligence. I haven't quite got my hand around that one yet. Like, how does, what is it? But it seems to be the decentralization of something. Um, uh, and what I find most people don't appreciate, even in Bitcoin's history, we see it. So in 1984, IBM announced the IBM AT. So that was kind of the seminal product that kicked off the personal computer revolution. They obviously had number one market share at that time. And that was about the time I became involved with Zenith.
Mm-hmm.
Um, by 1987, I was a very minor part of the team that was working on what I consider to be the world's first laptop, which was almost a secondary decentralization, form of decentralization. Right now, we removed the cord and the idea of a computing device on an airplane or in a car or even in sitting on the couch, like not being at a desk in a different room in the den or something like that. Like what that did was pretty radical. But anyway, if you looked at market share, for instance, at that point, IBM was number one, and let's say in the mid 80s, we had a company called Compaq.
Mm-hmm.
We had Zenith. Toshiba was involved. Fujitsu was involved. Those were kind of the big names. Fast forward 10 years, just 10 years, and IBM was essentially out of the business. So they went from number one market share to nothing. And by the way, even the IBM you might see IBM brand. That's a brand that's been sold to a Chinese company. That's not really IBM. They sold the brand. Um, you had, so by the mid 80s, you have Dell, you have Gateway. By the way, we were the two renegade companies. We were not the suits. So we were the equivalent of the cypherpunks in the early days of the PC, kind of bringing computing to the masses. Neither company, Gateway was based in South Dakota, Dell was based in Austin, Texas, but all the big companies were essentially either in Boston or in Silicon Valley at that time. So what I'm getting at, though, and then fast forward another 10 years, by the way, and now you've had if you look at the top 10 from 1985, 1995, and 2005, I don't think there's a single company that was consistent in all three, like that was in all three. And the radical changes over each of those uh, were well, there was a major radical changes in that list over each of them. So if we look at, let's say, who are the leaders today in mining? Let's just
Mm-hmm.
say, who are the biggest mining companies? For the most part, the pubcos, right,
Right.
are the large ones. Well, 5 years ago, they were all very small companies, and my prediction would be, I'm not necessarily wishing ill on anybody, that's not my style, but history would say 5 years from now, most of them don't exist. And all you have to do, by the way, is look at other parts of the infrastructure. So, what I'm saying too is, who are the leaders within different segments of Bitcoin? Um, the likelihood that they continue to be the leaders is actually quite low. It's difficult to sustain positions in a fast growth early in this phase. It's difficult to maintain that position for a long period. And also, once you do that, you realize that maybe the mindset of the community might change rapidly with that too. So I don't want to get too deep in the weeds, at least at this point. We can maybe come back to it. But so we look at some of the things that have occurred within Bitcoin today. For instance, we'll call it the battle over, do filters work or not?
Yep.
Okay. So my take on that is this. Right now, it is well, first, what does it mean for a filter to work or not? But if we define it as somebody putting in a transaction that's outside of the normal policy, how quickly and at what cost can it get into a block? And right now, the answer is it won't cost a very big premium and it will get in pretty quickly. Okay. Well, right now, what we have is we have um, really two mining pools that create the vast majority of all the templates, and their customers, and I think they would view the pubcos as their customers, don't care. So therefore, filters don't work. However, if we have a different set of companies, and maybe even a different set of pool leaders 5 years from now, filters might work. So, like my position on kind of the whole filter thing is the group that says filters don't work, and they believe they have conclusive evidence that filters don't work, are using a case study that is too narrow and and hasn't considered a wide enough period of time. So whether or not we should be changing policy and all that, that's a whole different argument. But what I'm saying is we have to be cognizant. It doesn't matter whether it's wallets, exchanges, mining companies, mining pools, whatever, that there's going to be tons of change in who participates,
Hmm.
why they participate, what their motivations are, what are their motivations, incentives. And I think we too often, especially I think with a lot of the OGs, and I don't know where I sit if I'm an OG or not. There's certainly more people that are more OG than me, but I think a lot of the OGs think, oh, we've seen it all. It's all kind of resolved. We know how this plays out. And I think that that's wrong. I think we're going to be radically surprised, as an example, by who mines, why they mine, um, where they mine. Like all these things, I think are going to be very, very different, and probably in that 5 to 10 year horizon, we'll see these huge changes. And by the way, I mean, look even just to what happened. The ETFs now are less than 2 years old. They hold 6% of the Bitcoin. Strategy holds another 3. So we have true institutional holdings of roughly 10% of the entire supply at the institutional level. And I'm not saying it's good or bad, but I think that is the trend, that the individuals are going to lose ground to the institutions over time in a large way. Doesn't mean we still can't all self-custody and have that opportunity, but that's the way it is. And I think to fight that is wrong. That Bitcoin is for everybody. We can't dictate who participates, how they participate, what their motivations are. And if we try to do that, then I think we have failed against the ethos. Um,
Totally agree. I mean, at this point, if it's been designed well, by its mission, by its ethos, it should have more of an impact on them than they can have an impact on it. Any new entrant should have less of an impact on Bitcoin than Bitcoin has on the behavior of that new entrant.
I agree with that. I like the way that you phrase that. However, I think what we have to, um, I don't want to again dive into the weeds on something, but if we look at something like block space today, I'm writing a paper right now, and I've talked about it somewhat publicly, but when you look at the way a transaction gets included in Bitcoin, if I'm going to send you some Bitcoin right now, Bo, what happens? Well, I go to my wallet and I I I get some assistance from my wallet, which is looking into the mempool, which is saying, well, hey, do you want to get this to Bo in the next block or in 5 blocks or whatever? And it tells me 1 sat per V byte or 6 sats per V byte or whatever, whatever that is. But it's a very real time market. And there's some real power in that. It says that in the way that it's currently structured, anybody anywhere in the world can enter the transaction space and essentially try to bid their way in. And assuming, this is a very dangerous assumption, assuming that miners are motivated by the block reward, then if they are, then they will, then whatever your expectation is highly likely to be met. So if I picked 5 blocks and that happened to equate to 3 sats per V byte, it might be 4 blocks, it might be 7 blocks, but if I was sending you the money and you were expecting it sometime in the next hour or two, it probably the expectations got met. But think about the advantage of the fiat system for a moment. We are at a gross disadvantage from the perspective of especially institutional level people. And you and I both run businesses. How much of your business do you like being run when you know that you're going to need to do something, but you'll find out how much it's going to cost and how long you're going to have to wait when you get there.
It's the worst experience in the world.
Right. Yeah. And it's like, hey, uh, going to the airport to rent a car, and you've just flown in and said, I'll just take my chances when I get to the rental car counter, right? Oh, do you have any cars available? I'm sorry, sir, we're booked for the next 2 weeks. Or oh yeah, we have you got your family of 6 and they offer a Toyota Tercel for $400 a day. That's all you can get. Like, it's kind of the equivalent of that. No, you can't work that way. Businesses can't work that way. Businesses need to know how much, will they have access, and within reason, what is the cost threshold around it. If they don't, they won't use the system. So I think Bitcoin faces somewhat of a crisis, an identity crisis, that the day has come, because we've lived in this world for 16 years when essentially block space was never full.
Mm-hmm.
It's essentially been free all the time. So if every time you went to the airport to rent a car, you got the $19 a day deal on a BMW M5, it's happened every single time. You might not call ahead and get a reservation, but at some point, when that stops happening and you end up in the Toyota Tercel, or you end up walking or taking a cab everywhere or whatever, you'll change your behavior, right? And there'll be a rental car company that will offer reservations, and essentially that's what we need. It's a key component of it. There's a Actually, maybe I should stop there. There's a second side to it, but I'll let you comment on that maybe.
Well, it just brings to mind, you already mentioned it, even people who have been in this since the very beginning or near the beginning, it's almost arrogant to think that you've seen everything that can happen just because you've seen everything that's happened so far. And that, I think, is what you spend a lot of time speaking about, is all of the things that haven't necessarily been widely considered but are distinct possibilities in the future. Just because they haven't happened yet doesn't mean that at some point incentives don't align for them to be a very real problem for people to solve who are trying to use this network in any meaningful way for the regular course of business.
Yeah. Yeah, because in my opinion, this thing that we're talking about here, which is the way people, specifically more organizations, get access to block space is our major, to the degree we get institutional adoption, I think it will be the single biggest issue, because will the market for Bitcoin loans explode or not? To me, the answer lies right here. Because let's say you're a company giving loans, Bo, Bitcoin-backed loans, and I need to make Bitcoin-based payments to you on a regular basis. Okay, so I borrow 10 Bitcoin from you. Oh, let's say I borrow 12 Bitcoin from you. I have to pay you back 1 Bitcoin plus a little interest every month for a year, as an example, and I owe you it by the last day of every month. Well, what if when I get to the end of the month, block space is completely packed and I have massive penalties, which you rightfully should have if I, as the borrower, don't pay in time? You know, this is a big issue. If you are a company selling goods and services and you want to take Bitcoin payments, and maybe you even prefer Bitcoin payments, but like here, we're in December, right? A lot of companies want to show a lot of money on their balance sheet and low inventory levels. Like I came from a public company. Was at Gateway? That's what we wanted. We wanted we wanted all the goods sold. We wanted no inventory. We wanted a mountain of cash on our balance sheet. The Wall Street loves that shit. Okay. Well, if the last 10 days of the month are you're trying to get all these payments, and even if there are L2s out there, you need to reconcile the L2s to get it on the balance sheet, right? If you're having trouble doing that, that's going to be an impediment. You'll say I prefer Tether or I prefer US dollars.
Mm-hmm.
So obviously there's a lot more there, probably deeper than we want to go today, but this is a big thing. So, do we want Bitcoin to truly be a monetary system, asset, currency that is used on a global basis, especially at the corporate level, the institutional level, the big financial institutions, or do we want it to just be kind of a niche store of value asset? So it's not is Bitcoin going to be successful or not, but what is the ceiling for Bitcoin? And I think it's defined by this, because gold kind of defines for us what a store of value asset can be. It's $20 trillion dollar asset, right? So, or maybe it's more than that now. Maybe it's 30 with the price increase, but there's $900 trillion in assets. So, do we want to just grow 10x and try to unseat gold? We probably have to steal market share from gold in order to do that. Or do we want to open to everything? And I think solving this problem is part of that. A part of it is pertinent as well to mining. And as you said something earlier. I probably didn't respond to it, but yeah, Gateway was a company. I think when I looked at it, interestingly, Gateway as a company, our revenue was almost identical to the 2024 industry. So my old company was the same size. And I think one thing we in our world we forget about is how small we are. Bitcoin is still very, very small. But you asked me why I wanted to be involved with it, I guess coming from there. Well, because I do believe in the ceiling. And I believe that if I look at it just with the financial lens, I believe it can be massive, that we have 100x growth potential even in my lifetime still. But I also view through the lens of my family, my grandkids, and what I think Bitcoin means to the world. And so I find a lot of hope from what Bitcoin can provide. And without Bitcoin, I worry tremendously about what would happen, what is their future. And I have two grandkids born, one in September, one in October. I have seven now, but two born recently. So they're born in 2025. So it's very likely that they will be alive um, almost at the end of the subsidy, right? Because by the time we hit uh, 21, 25, 100 years from now, and I'm expecting they'll live around that amount by then at least. There's nothing left. We have like three halvings left. There's like, what is there, like 30 sats left to mine in the subsidy. It's something silly like that, right? So it's already over by that point, and the whole ecosystem has to be self-maintaining at that point. And like I said, I really hope for that. And I even think about their kids, and that their kids, my great grandkids, they'll be alive well into the middle of the next century. But I know I'm all over the place, but I'll say something else too. So we also have to look at this through the lens of the miner. So mining today, I ran this stat recently. So through June of 2025, fees have amounted to 1.48% of all the revenue generated by the miners from day one, right? From block
Yep.
one. So it's 1.48%. And the average per block is 0.33 per block. Okay. Now we're running way under that, right? We're running under both of those right now. And so it's probably weird for people to think or to hear me talk about this, like, hey, block space is going to be insanely scarce, but it kind of has to be. It's another thing. Like, Bitcoin block space has to be insanely scarce for us to be successful, because we're 2 years and 3 months or so from a halving. We'll go to little over 1.5 Bitcoin, and then we're 6-ish years away from 0.75. Now, if we hit 0.75 in 6 years, so what will that be? 2031-ish, 2032, somewhere in there. If we still have the 0.33 Bitcoin, which I know that's the historical average, that would mean that we're getting about 30% of miner revenue is coming from fees. I think that is a break point in the way pools are run today. It could happen sooner, that FPPS breaks. Because what FPPS does, full pay per share, which what it basically means for those, I assume we have a lot of mining people, given,
Of course.
but just real quickly. So FPPS, if you're not familiar with it, it basically means that the mining pool pays you for your computing. You're just renting your computer, your hash power to them, and they're paying you every 10 minutes. They're sending you or crediting you for some money. Whether they win the block or not, it doesn't matter. They take all the risk. Prior to that, which would have been prior to October of 2020, was when Foundry came out and brought that payout method. So prior to that, it meant that the risk of whether or not a block was won was shared amongst all the people in the pool. And then that risk shifted to the pool. And now we have way over 90% of the blocks use the FPPS payout method. Now, the reason that it can work right now is that they're only taking a risk on one variable, which is their luck of when they win the block. And in the reality, over any extended period of time, it's not really even a risk, because if they have 1% of global hash rate, let's say, they'll average a block and a half a day. And they might have a day with 1 and 2 days in a row with 0, and then they'll get 4, and then they'll get 1, and they'll have a pattern kind of like that. But as long as they have enough reserve, and you can calculate what that reserve is, you're okay. And the reason you can, though, is that the revenue that you're guaranteeing back to the people that are essentially leasing you their computers is all subsidy. But now, if you introduce a high percentage of fees into the reward, and there will logically be variability, because just as I was saying, like my prediction will be you'll see the last 2 or 3 business days of every month be very expensive. You'll see
Hmm.
the end of quarter and then end of years be insanely expensive because there'll be lots of transaction reconciliation that has to occur. Well, if you happen to win the blocks at that period, you'll do really well as an FPPS pool. But if you don't win any in that period and you only win the blocks on, I don't know, Saturday mornings, and when maybe the network is less, you'll see a big change. Because, and the weird thing about fees, um, I got this in this paper I'm writing, but if you study economics, there's a famous economist named David Ricardo, and he has the Ricardian rent theory is what it's called. And the simple version of it is it says that things are really cheap as long as supply exceeds demand. But the moment that demand exceeds supply, it's it's an astronomical exponential change. And he built his theory based around agricultural land. I think it was back in the late 1700s, early 1800s. That's where this economic theory came. But what is block space? Block space is just virtual real estate. It's the
Hmm.
same thing. So we're fighting for, the thought process was when you have a, that's why he used agricultural land. What he was trying to prove was that when you have a finite resource that has no means to respond to increases in demand, what happens to the price? That was the thing. And we're exploring the same thing here in the virtual world. And we have seen examples. I'm sure you've seen it, Bo. You've been around almost as long as me. You know what happened around the halving. You didn't see things go from 1 or 2 sats per vbyte to 4 sats per vbyte. No, they went to ungodly levels. In fact, we saw certain blocks.
Like 40 more Bitcoin in fees on a single
Right,
block.
right. So we've seen the case study a little bit, right? Now, the halving was an issue. We had a lot of the inscription bullshit and all that happening. But the thing I'm thankful for inscriptions for, it's the only time you'll ever hear me speak positively, was they gave us some really positive, valuable, positive, some very valuable information about the cost of block space and what happens and how it goes. I used to give this example, I'll say it today, about scarcity. So when if I have an apple tree, it's the only apple tree in the whole world, and it produces 100 apples a day. When I only have a market for 99 apples a day, they're cheap, right? I'm still throwing away 1 apple every day, right? But the moment 101 people want apples, I can jack the price up a whole bunch. And when 110 and 120 want them, it gets even worse. But in reality, it's only the change in demand between 99 and 101 that really creates the material difference. It's that one person who doesn't get one. That point, we start to understand the value of the apple, because we say to that one person, how much are you willing to pay? Okay. And so if I was charging $1 an apple for the first 99, because I'm still throwing one away every day, when I have to tell the guy, hey, I don't have any apples today, and he says, well, I want one for tomorrow, I want to reserve one for tomorrow, I'll give you $5 for that apple. Okay, well, now the price is $5, right? So we're going to see that same thing happen with block space. But what's going to happen is some days people will want 99. They'll still have days where only 99 people want apples. There'll be
Hmm.
days when 101 people want apples and days when 300 people want apples. Well, the same thing's going to happen with block space. So now, getting back to the mining, we're going to see radical shifts in the profitability of blocks. But winning a block is a random thing. You don't know if you're going to win the one with the on the day with the 300 apples of demand or the one with 99 apples of demand. And so now we have a two-dimensional, two-variable equation that will make it, I believe, impossible for the FPPS payout scheme, at least as it's presently constructed, to work, because they have two variables, but they really can't control the fee variable. The other variable, the first variable, which is how many blocks they win in a given period of time, can be overcome by just having a shitload of money available to pay for the downtimes, knowing that over an extended period, let's say over 6 months, it will all even out. So as long as you can buffer that. But this other one, you can't do it. So, but what it also, I think, does is it changes then, I think, as a miner. And I use the term miner specific now. I'll be specific with that. A miner performs the following functions. The miner runs a node. The miner runs a node, manages a mempool, creates block templates, creates Coinbase transactions, receives Coinbase transactions, and it hashes. So those are the major things that a miner does. Most of the companies that call themselves mining companies, which would include like the pubcos, only do one of those things, which is hashing. So we really shouldn't call them mining companies. We should call them hashing companies. The exception would be Marathon. I have other issues with Marathon, but I always applaud them because at least they are a real miner. They're really participating in the network. And pretty much everybody else has abdicated that responsibility to Foundry or Antpool or, whatever,
Because
whatever.
Marathon has their own pool, creates their own templates, correct?
Yeah. Actually, to be technical, they don't have their own pool. They are a solo miner. Um,
Mm.
and because you and I can't join their pool. So Ocean, which I'm affiliated with, so full disclosure, I'm on the board and an investor in Ocean. Ocean brings a whole bunch of those functions back. And so one of the things I say is I made the mistake of calling my company Barefoot Mining, and I didn't earn the name until about 2 years ago, because when I joined Ocean, because at Ocean, I do run my own node. I do manage the mempool. I put what filters I agree with on my mempool. I build the template how I wish to build the template. The Coinbase, I receive payment directly from the Bitcoin network, not from a pool. And obviously I hash. The only thing I don't do is create the Coinbase transaction. That comes from Ocean, which, but I pick where it goes. I pick the Well, I guess I pick what address I want to be paid to, for my part of that. But I think what we're going to find is that there will be a return to real mining, and people will demand it, because what they're going to understand at some point is the power that comes with it, and that multiple ways of monetizing come into play. So I guess before I go there, maybe you don't even want to go there. I should
I
shut up
want to
again for a little bit and let you.
I want to ask you a question. Is back to something that you said earlier, which is we have the opportunity. Either one you could consider a success, but to either be a niche store value asset or essentially the global monetary standard that everybody relies on as the base layer of value transfer. What is it about how we treat block space that determines which path we go down or what world we end up in?
There must be a mechanism for large corporations and even individuals, to be able to say, hey, I'm sitting here. It's December 3rd, 2025. We're recording this. I'll even give a simple example. If I know that sometime in the last week of December this year, I have 100 transactions that I know I need to run in the last week of December to close my
Mhm.
books properly, to get everything in order. I need, as a company, to be able to go out, secure a high level of guarantee that I'm going to get those transactions in and know what the cost is going to be within a reasonable threshold. That is, and by the way, the miner on the other side needs the same thing. The miner needs to know that if they invest their capital and their operating resources into this, that they're going to have the same thing. It's no different. So what I'm saying in another way, I haven't said this yet today, is I think we must think of block space as a commodity,
Mhm.
and it must have all the same things that a normal commodity has. So if I'm a farmer and I grow corn, when I plant the corn in April, let's say I'm in the Midwest somewhere, I plant my corn in April. I most likely, maybe even before I put the seed in the ground, knowing that I'm going to have an October harvest, I may have sold 20% of my projected harvest at that point and locked in a price. I
Mhm.
have no idea what the price of corn is today, but let's say that's $4 a bushel. Like, I lock it in. And then come May or June, we've got, the corn has started to grow. We have an better idea of how much corn we're going to actually grow. I go sell another 20 or 25% at whatever the price is, right? And as I go along, by the time I get to October, before I've harvested it, I've already know exactly how much I'm going to get paid for every bushel. Now, the other side of that is, let's say there's a large commercial tortilla company. Well, they buy a shitload of corn. Well, they, for their fall production, they know approximately how many tortillas they're going to sell and how much corn they need. Well, they're not going to wait until October and see what corn is on the spot market. Well, they're going to go find farmers like that in April and start buying, so that by the time they get to October, one, they've guaranteed all the corn that they need, and two, they've, within reasonable parameters, know what the cost of that production is, because they've already sold the tortillas to somebody, right? So that's the way business really works at a large scale. There's very little that happens on the spot market. And then there are ways of hedging, speculating. As soon as that emerges, there's a big market for speculators, of course. Um, and I know this will give a lot of people, like, probably wincing to a certain degree, because there's kind of things that Bitcoin has fought against. But I think that's where the community ultimately will decide. Like, if it wants, we can't be the global monetary system and the base layer of settlement and not do these things.
Mhm.
It's not possible. So we either decide we're rejecting that whole group, or we develop the tools and the business models to let them be successful. And I think where I sit on this, that yeah, let's do it, because I think the world will be a much better place with it. But there's going to be some shitty stuff. Imagine this: people are out, like, shorting Bitcoin and getting margin called on Bitcoin. That same stuff's going to happen with block space. People are going to people are going to speculate on it. People are going to short the cost of
Mm.
block space. And these, by the way, will be delivered products, much like the corn is. So there are markets that are purely speculative, but block space will be, it's called the delivered markets,
Right.
meaning that it's not just a numbers game of two people betting against each other. At
No,
the end of the
not a financial commodity, something people actually need to physically use.
Correct, correct. So gold, silver, agricultural products, all those sorts of things, um, fit that same mold. So, um, like I said, I've had part of the reason I'm even taking you through this is that as I've talked about this more and more over the last couple of years, and even more so over the last, let's say, 6 months or so, and like things like the filter wars have come up that I've gotten embroiled with a little bit. Um, I found that some people react extremely negatively, especially from the OGs, especially deeper in the technical community. In their defense, what I'll say is they look at things like the mempool and being able to estimate a fee as through those tools as a critical piece of the way Bitcoin works, and I understand that. And I think they're trying to protect the small guy. And I also understand that. But that's partly why I said like it's kind of a choice. We can say that we only want to be this store of value, or we can say we want to go for it and become the new monetary system. And those will be the hard choices we make, because we'll have to give something material up. But the other thing I'll say is I think Bitcoiners are spoiled. I said it before, but I want to say it again. That the word subsidy, we must remember and think about what it means. I think it gets used very lightly. So subsidy, I think most people think of the subsidy, oh, that's the new Bitcoin being issued, right? And they also say that's how the miners largely have gotten paid. It's to subsidize the miners. That's not exactly true. It's not the whole truth, because there's one other piece. It was also to facilitate adoption, to give the users of the Bitcoin network free and easy access in the early days while we were in this early part of the adoption cycle. But it's my belief, I don't think Satoshi ever wrote about it, but it's my belief that at some day, when as the subsidy is going away, the subsidy is not only going away for the miners, but the subsidy is going away for the users too. Like, hey, you you are transacting on the world's most precious digital real estate,
Mhm.
on the most secure network in the world, and you're used to it being free and available whenever you want. I'm sorry, that's not the long-term vision. And so those that try to preserve that, I think, are fighting the growth and fighting global adoption.
Have you ever felt like you've done everything right, built the business, made smart investments, and yet there's still one piece missing? If you're someone who believes in Bitcoin but hasn't yet explored mining, let me introduce you to something that most people never even realize exists, and that is fully managed Bitcoin mining with Abundant Mines. We help high net worth individuals like you own industrial grade mining infrastructure without ever touching the machines. It's hands free, professionally hosted, and designed to generate passive income by turning electricity into Bitcoin every single day. It's tax advantaged, it's asset backed, and for many of our clients, it's become one of the smartest moves that they've ever made in their investing career. So if you're ready to take the next step into real Bitcoin ownership, not just holding, but producing it at a discount, visit abundantminds.com. That's abundantminds.com, and see why this strategy is changing the game for serious investors. I don't think it's unreasonable for there to be growing pains with something that goes from nothing to a couple trillion in just over a decade, and for there to be more as we do another order of magnitude larger, both in value and people that are actually using it. And it's the stage of any company, organization, technology. There's the early product, there's the renegade cycle where you're rebelling against everything. And at a certain point you hit the scale where you are the incumbent, you are needing to serve as many people as possible. You
Yeah.
cannot just mindlessly build without the needs of everybody who may use this in the future in mind.
Yeah. We talked before about the personal computer, and I think boring in a little on the adoption is a good topic. So let's say pre 1984 ish, late 70s, early 80s. The only people participating with personal computers, there were all kinds of different ones, but they were mostly geeks, what you would call geeks, hacker types,
Like the power user.
even more than the power user. Like these are people that got off on their computer not working right. And got a massive dopamine hit when they finally fixed it. Like they took pleasure in this, like a masochist sort of thing. Like, oh, my computer doesn't work right, but I get to fix it. Like, and that turns them on. And again, if you wanted software, you wrote it. Like you didn't go buy it, you wrote it. There used to be magazines. You'd go to the rack. There'd be a massive section, and there would be magazines. You know what they had? Just computer programs in them. Like they actually the code, so that you could go back to your computer and type in the code for a, I don't know, something to manage contact lists or play some game or like those sort of things. Like these are the sort of people, right? So they're really early. And then the next phase happened. And these were kind of the early adopters. This is probably where the power user was. The
Mm-hmm.
IBM PC came out and it worked. It didn't do a tremendous amount, but it worked. It was reliable. It didn't break a ton. The early adopters and the power users started buying them. And and there were a few early pieces of software, like what was called VisiCalc. It was the predecessor to Excel, or Lotus. Some people may have heard of Lotus 123. It was also an early, and we had word processing programs and things like that. And these were, so the next group, so it's kind of the next wave of adoption, right? So there's the first wave, which was these uh, hacker geek types. And then we had like, hey, it's kind of doing something useful, the early adopters. And then once the early adopters were like using it and they're telling their friends who are not power users, but maybe they're willing to use something if recommended by an early adopter, and they'll give it a test, but it better work. Like the early adopters have to be careful about pushing it too early on the, or what's called the early majority. I'm stealing this from a book called Crossing the Chasm. Well, what the categories are,
Mm-hmm.
they call them innovators, um, early adopters, early majority. Then there's the majority, and then there's the late majority, and then there's the laggards. That's the curve they use, and I've kind of modified that a little bit, but we have a whole bunch of the OGs in Bitcoin. We're the equivalent of those, the hacker geek innovator kinds. Like you still talk to them. Like they're people that like command line prompts. They like messing around in Linux. And I used to be. I'm not that way anymore. I just don't have time for it. But they'd like to write a program that's their own seed phrase generator, like those kind of people. God bless them, by the way. But then there's the early adopters, right? And that might be, I don't know you super well, but that may be somebody like you. You're certainly ahead of the curve. Um, you have some technical competency. I'm sure you've probably for quite a while been telling family and friends who were not as technically inclined or maybe more risk averse to get involved with Bitcoin, and you help them get their first wallet, or like you're that kind of person. And
Yep.
now we're at the next phase. I think we've got a lot of the early adopters. It's not a binary thing, or like it just it's kind of a mass moving. But we're in that phase where a lot of the early majority is coming in.
Mm-hmm.
And um, but what happens is there's a psychological shift. Each of these are different personality types. We kind of talked about it. They're each a different personality in and of themselves. And that creates issues. And they look at things through different lenses. And I think it's very important that the OG group be cognizant that these other people look through different lenses. And so, like, I'm a huge advocate for self custody, but you have to be careful about pushing somebody who's not ready for self custody to self custody.
Hmm.
Is it better for them to have an exchange account or, God forbid, buy an ETF? Hopefully, you're going to move them down the road. But I know some people would argue with me, I've done a lot of this myself. Like, it's hard
It's
to
a
take.
real, there's trade-offs no matter how you look at it. For each different class of holder, there's no one size fits all.
Yeah. And now kind of wrapping this back around, there's the same thing is occurring not at the individual level, but also at the corporate level, right? So the early corporations who were involved, I guess our companies would maybe be in that, and there are others that maybe were set up a lightning node and were some cafe that took Bitcoin in 2017, well, not 2017, but 2022 or something like that with lightning. But anyway, there are those kind of things, but obviously there were no major companies involved. And MicroStrategy, kind of the first in a kind of leading, I would say, in that early adopter, but as a
Hmm.
corporation phase. And now we have some others. The ETFs are probably indicative of more early majority at the corporate level, and all these financial institutions. Now, they're doing it, I think, somewhat out of fear too, like they may be missing out, on something big.
Yep.
But but again, I go back to this thing about block space. So now, as they're coming in, and they start even just using Bitcoin in their treasury, and so you can just imagine the conversation between, let's say you have $100 million company, a decent sized company, and the CFO has convinced the CEO to accept Bitcoin payments and maybe have some of the treasury in Bitcoin. And can you imagine the CFO walking into the CEO late in the fourth quarter and saying, "Oh, we have a problem. Well, what's the problem? Well, I can't move the treasury from this place to this place, or to move it to the exchange to cash it out because the fees are so high." Can you just imagine that kind of conversation? What the f is like? Are you talking about? And that could be the end of Bitcoin in that company for years.
Right.
That they can't reliably get access at a reasonable cost to do these sorts of things. And so we have to, in the near term, create solutions to some of these problems. And again, same for miners. I've been doing this since 2017. I can't believe that, but 8 years from today, so I've been doing it for 8 years. 8 years from today, I'm going to be mining with a subsidy that's 0.75 Bitcoin and be closer to the 0.37 something, whatever the number, 0.38 or whatever that number will be, you know, almost 10x smaller than today. So I sure hope fees are a bigger piece of the puzzle by then. If not, mining's going to look very, very differently. But I'm going to have to behave differently. I'm going to have to act like the farmer. I believe I'm going to have to pre-sell my block space.
This is not just for the institutions. This is also for miners in the sense that it's critically important to the mining business model that something like this exists for the
Right.
certainty of the people who are operating in that industry, of which you and I are both a part.
Correct.
And it is indicative of where we are in the stage of development that the early majority, or excuse me, the early adopters, the innovators, they're willing to suffer through things that don't work for the
Yep.
opportunity of something new that solves a problem for
Yep.
them.
Right.
We're entering the phase where people will not suffer who need to adopt this and who want to adopt this. They won't suffer bad UI, bad user experience. They won't suffer
Yeah.
something that puts them out of compliance. We're really
Yep.
navigating appealing to the broadest group of people, not just for those people, but for the network itself to be viable and achieve
Yep.
its potential. Maybe not,
Yep.
survival, but to achieve its potential.
Yep. And by the way, we face the similar thing with the personal computer. So, you know, we the personal computer. One, we're replacing mini and mainframe computers. So to go into an organization and say, hey, decommission this system that probably somewhat worked. I mean, obviously it had issues, but it worked. We had, go into a Ford Motor Company and say, hey, get rid of all the terminal. You have 80,000 employees. We want you to get rid of the terminals on all these people's desks and replace them with personal computers. Well, back in those days, we had rudimentary networks. There was like something called a Novell network and a token ring network. These are like pre-Ethernet days. Had very rudimentary like email systems, and shit didn't always work really well. And there were a lot of sleepless nights, especially for guys like me that were on the engineering side, when we would deliver, let's say, several thousand computers to a company like Ford, only to find out that some piece of software didn't work right, or their network wouldn't work right, and the tolerance of the use of the customer for the resolution was very small. It was very, very small. Like, hey, you got 72 hours to fix this, or 4,000 computers are coming back. Something like that was not an uncommon state. And it was a difficult time too, by the way, because the personal computer in those days, I mean, it was complex. We had the hardware, we had BIOS, we had operating system, we had the application software, and then we had all these peripheral devices. And like, we were just making the computer. But if any part of that system didn't work right, we were the ones responsible. And it obviously we ended up getting it to work, and my compatriots at other companies were largely successful, and we defeated it. But I'll tell you, the naysayers from the old guard would they were it was like 10,000 Peter Schiffs out there advocating for mainframe computers. Like, it was the same sort of thing, so.
That's not a world I would want to live in.
And by the way, what was interesting too was this is another interesting similarity. We were all young. So I'm 61 years old now, but back then I was 23, 24, 25 years old. And and even my boss was like 33. I mean, we were young, we were all young, because the old computer engineers, they all wanted to work in the legacy systems, and none of them believed that the personal computer was going to work. And it was only kind of the brave, or desperate, that end up working in the personal computer area. And so we were fighting I made a joke about it, but I'm somewhat serious. It was very much like the gold bugs. Like we're, and the gold, whether it's the gold bugs, and that class of sound money guys, even though they're somewhat counterculture, they're still largely more of this establishment mindset. And there are a lot of old people too. I'm an old guy now, but as I think we're pretty young, and the old people don't like the young people telling them what to do, or deconstructing what they built. I think that's, you know not to psychoanalyze Peter Schiff, but I think he got so invested in this position against Bitcoin that he just couldn't come to terms psychologically with admitting it. And I'm sure there's some narcissism and egotistical nature, because I think all of us, like, to get Bitcoin, we use the term bend the knee, like Vanguard bend the knee yesterday, right, to Bitcoin, but we all have to bend the knee. Almost everybody rejected it at some point, and then you have to be man enough and or woman enough to admit that you were wrong, and that something new and innovative might displace this thing that you believed in. Kind of a Wizard of Oz moment, almost, maybe, like, to realize that the system you had believed in was false.
It's such a futile exercise to try and psychoanalyze Peter Schiff to me.
Yeah, that was probably not the wisest thing for me to do, but
I want to ask you a question, because you mentioned the psychology that went into people who wanted to be a part of the personal computer revolution, and making a decision to be at the leading edge of not just building technology in mining, but being a miner yourself in your 60s. It's not an easy business to be a part of.
yeah,
So there must be some, and I do know you as a mission and purpose motivated person, so I know that that is part of it, but it
yeah,
probably isn't all of it. What is it that not just pulled you in, because we know that ETH
yeah.
mining was kind of the impetus, but what keeps you in building a mining company, knowing what is ahead?
Well, for whatever reason, I think I am attracted to this base layer. So remember I told you the thing, like, for a personal, if you look at the personal computer, there was the personal computer, and there was the operating system, the application software, and the peripherals, and like all these other things, and the networking and all this connectivity, all this stuff that sat on top of the personal computer, right? These
Mhm.
other layers. But the real action, like, was right there, you know. And that's how I view mining in Bitcoin. I think everything builds on mining. And I view mining, now creating templates, being a real miner, as the most important part of the ecosystem. I'm sure others would argue with me, but it's a massive privilege, massive responsibility, as well. So to be in the position to actually choose what goes into a block, like I said, that's a massive, massive privilege and responsibility, and I really like that. It's in the fiat system, it's kind of the equivalent of being the Fed or the BIS, the the Bank of International Settlements, right? I mean, it's kind of that level of responsibility. Like I said, but simple answer: everything else in Bitcoin is built on top of this, and so I like being there. I think that's where the action is.
One thing that you've mentioned that we didn't really get a chance to go that deep into, but was the first way that I was exposed to you, was the miner's trilemma. And
Mm.
brief overview, there's always something that is constraining a miner to succeed, either energy availability, capital availability, or access to hardware. And I think I know your answer to this, but I am curious, since we're seeing a ton of mining companies pivot to giving their capacity over to AI. We're seeing AI as sort of this mad rush for all available energy capacity. I'm curious if you feel like that is creating energy as the constraint in this moment, or if it is more of a relief valve for people that otherwise would use their energy to mine. Do you see it as something that just kind of AI influence broadly as something that's making mining harder, or actually supportive of us having some breathing room?
Um, I think it's going to be harder. I think as you mentioned, for those, there's an article I wrote several years ago now in Bitcoin Magazine. If anyone's interested, that I expand on this a little bit, but um, it's interesting because we've gone through periods where the constraint was capital, like that would be like post the FTX BlockFi Celsius debacle, like that was a really capital constrained period. We've gone through periods where the constraint was hardware access, which would be post the China mining ban,
Mm-hmm.
especially. But I think we are entering, and I think you're sage in bringing this up. I think we're entering the era of energy being the constrained item, and it's specifically consistently available energy at a good price. And what's really driving that is the fight with AI first and foremost. And I should also point out, I mean, I think largely we're going to find that the mining industry continues to value jurisdictions that they feel safe in.
Mm-hmm.
It doesn't mean that gridless, and I love what they're doing in Africa, won't do some stuff there, and there might, Ethiopia and different things in maybe Central and South America. That'll certainly still be part of it, but you're going to see all the material mining done in the U.S. and Russia, in China. The big boys are where it's going to happen. It's where the energy is. The problem is the constraint is that AI can pay more. And I'm going to try to paint a visual, see if I can do it. I have a chart that I did. So if you take, there's a little over 30,000 terawatt hours of electricity generated every year. And it's somewhat distributed in a bell curve like looking chart. With the y-axis being how much energy is available, and the x-axis being the cost of that energy. So there's this peak point, let's say in the 12 cent per kilowatt hour range. So more energy available at that price globally than any other amount, and then kind of a bell curve around it.
Mm-hmm.
So if we say today that mining at a commercial level, we're not talking individuals or maybe people that solo mine for ethos or for, which God bless them. I applaud that, love it. I have my own plug for it. Hopefully everybody's got a little solo solo miner,
Thank
BitX
you for your
or
service to the
similar.
network.
Yeah, but so if you take 5 cents roughly and say everything below that level is what I would call the mining zone. If you're going to mine commercially, you better be there, and that gets cheaper all the time, right? So there's only about 6% of the world's energy is available in that band. It's about 1,500 terawatt hours. And the Bitcoin network's already using like 210 or so. So of the available energy in the right price range, we're already using a really large percentage of it. Now, below 2 cents, below 2.5 cents or so, that energy that's available there is often not consistently available. It's typically not. In other words, it's intermittent. Somebody may be getting that energy for 3 hours a day or 22 hours a month or something like that, and they're paying a higher rate the rest of the month. And that energy is not highly appealing right now to the AI crowd, because when the AI guys are doing their modeling, they often have to have days on end of consistent operation. They can't take 10 minutes off. That could cost
Hmm.
them everything. However, over time, as more of the AI output is directed toward inference, meaning that's what happens when you go into Chat GPT and you ask it, is would Donald Trump running for a third term be constitutional? Like, you ask that question, that's an inference, so that's a short clip. Now that energy probably could be used for AI down there, and as time goes by, more and more of the energy will be inference. So in other words, what I'm saying is, eventually the AI guys will even want that energy, but today they don't want it. Now, but the AI guys also can look at 6, 7, 8 cent energy, and there's a lot more of it, because you have the bell curve. There's
Hmm.
more of that. But what they really want is that energy that's sitting between 2.5, 3 cents and 5 cents, that is a lot of times owned by the mining guys. So the pubcos, like, in my mind, I don't want to be specific about any of them. I'm not a big fan of the public company. I think they've been bad for Bitcoin. Um, and they've been poorly run on the whole. There are a few that are okay, but they've been very poorly run organizations. I think they've paid themselves way too much money, and all kinds of things. And by the way, I think Core Scientific going bankrupt has a big an impact, their behavior, on what happened to Bitcoin in 2022 as FTX and BlockFi. Like, they were,
Hmm.
and they've never been vilified for it. Um, so I will call them out. That was Now they've come out of bankruptcy, and it's some different people. So I'm not mad at those people, but that crew that caused that initial thing was a massive, massive blow to the Bitcoin ecosystem, and it really hurt guys like you and me. By the way, really hurt us badly. So I think what's happening, though, is these guys are pivoting hard because they can pay more, right? Now, the good thing for Bitcoin is, I think that it will slow the growth of energy usage by Bitcoin mining. Doesn't mean hash rate is going to go down. It will continue to go up, but I don't think we're not going to go from, like, using the 210 terawatt hours to 600 terawatt hours, or some of the things. I remember when World Economic Foundation will post this, oh, Bitcoin's going to use all the world's energy and all that. Well, I don't think so. We currently use about 0.6% of the world's energy. I have a difficult time coming up, even in the worst case scenario, of using 2%, but I think it's going to be more like 1% of the world's energy. And it'll be a slow growth from here to there. And that means that hash rate growth will largely follow Moore's law. So what will happen with global hash rate is, the rate of, instead of both Moore's law being compounded with lots more energy, it'll just be Moore's law.
Hmm.
So that will ease some of the pressure on hash rate growth, and we'll see a lot of the public miners hopefully maybe even stop calling themselves mining companies. I think some of them are kind of pivoting already. They're trying to say we're an infrastructure company, or we're this or that. And I think they should go spend a whole bunch of time in AI, because I don't think they're real Bitcoiners for the most part. Most of them are not real Bitcoiners. So they can go do their thing there, and enjoy that. But I do think, to be fair, even companies like mine, I won't be surprised if at some point some partnerships or some blend of some of our operation with some AI stuff could certainly happen. Um, did that answer your question? And
Absolutely.
okay.
I look at it. I came into this industry from the real estate world, and so anytime I'm looking at a site, a resource, I'm always thinking of it from the lens of who else could use this other than me as a Bitcoin miner.
Hmm.
And that's a completely valid other use case for a large block of energy with decent uptime and network availability. So if you don't consider it, if you're not open to it, I think you're shutting yourself off from
Yeah.
opportunity.
Yeah. And by the way, I view AI as being one of the great impetuses to more Bitcoin usage too. So even if you want to look at it through that, I think
Totally
uh,
agree.
as the world moves more and more toward AI, that the commerce preferred by AI will be Bitcoin. Therefore, it's all very synergistic, right?
Completely agree. Ask any LLM what it wants to be paid in.
Yes, certainly. And someday, um, if you're a if you're a Tesla car, if you're a robot worker, whatever. I know we're getting into like weird stuff, but I think they will prefer Bitcoin, like to become somewhat self-sustaining themselves. That um, now I think Musk or others have talked about this. It's not my original idea, but a car that maybe doesn't exactly even have an owner could exist. It could kind of roll off the production line and Tesla sends it out into the world, and maybe Tesla's the owner, but I'm not really sure. And it goes out and it kind of rents itself out, um, giving people rides, doing deliveries, doing these sorts of things. It gets paid in Bitcoin when it needs a charge, when it needs brake changes, when it needs these other things. It uses the Bitcoin, but it's there to sustain itself. And so um, I think those sort of things, and you could say the same thing for a humanoid type robot. That same model could exist where they're out offering their services. Maybe they do cooking and cleaning for somebody. Well, maybe they have a family that they work with between 7 a.m. and 5 p.m. But then there's somebody who's a night shift worker. They're up like opposite on the opposite schedule, and that humanoid thing is doing services for them while the other one's sleeping. So, or even working in two or three different factories. Like they help make basket weaving in one factory, and then when they fill that job up, they go and wash dishes at a restaurant. And there's no reason that sort of stuff couldn't happen, and that the the humanoid could essentially be earning its own money and even making improvements to itself. And you get into some pretty wild stuff when you start thinking about it, like, oh, it wants to be able to walk faster. It wants to have a smarter engine, internally, like a better vision system. It could start upgrading itself. Like they're pretty wild repercussions of this stuff, and we haven't even probably everything we've thought about is just scratching the surface. Because I'll go back to the PC, we're kind of where we started too. Like there's a famous quote from Paul Krugman. Maybe you've seen it. Like, I think the PC will be, was the PC or the internet? I can't remember what she said, but
He said, I
the
think
internet.
in retrospect, we will see the internet as of no greater import than the fax
Fax
machine,
machine. Yeah.
something like
So you
that.
see, yeah, you see these kind of, predictions, and why? Because they have no vision in their defense, it's hard for all of us. But I
Hmm.
think if you know, but the world changes in weird ways and in rapid ways, and it changes sometimes in the unexpected ways, and the clues about where the change might come. I talked about this recently on my show, which is called the Bitcoin Boomers. But I'll tell you a story. So back when I was at Gateway, I was a chief technical officer. So my job was to, at the macro level, make sure that the products we were developing were the right ones for the market. But I had to have some vision. I had to look out. And so in the 60s, 70s, 80s, the US was led the world, right? So in terms of technology adoption, it was really the leading place, with maybe Japan being secondary. But we started to see a change in the late 90s where technology adoption could erupt in weird places. And so it was my job to say, well, why is this happening? And is this technology adoption that's maybe in this funky place one that is going to come global? So one of those was, we were actually at Gateway, we were developing a phone. This is pre-iPhone. We were trying to develop our own phone. And we had the basic concept of a smartphone. This is about 2001. The iPhone, I think, was 2004.
Hmm.
So mostly flip phones were available then, and then people had the Blackberries, right? Well, I became aware in this time period that texting, which existed in the US, but the average person texted once per day in the US, just one text per day. But I found out that in the Philippines, the average person was texting 22 times a day. Wow, that's a pretty big difference, you know. So I went to the Philippines to find out why. Why was this happening? And was it something that would translate to the rest of the world, or was it unique to them? And what I found out was, by the way, that the first reason really was economic. It was that relatively poor country, and the cost of making a call was so expensive that it led people to start texting more, right?
Hmm.
And they had a massive pager market, bigger than the US. They had a massive pager market. And so the texting market had already by that time killed the pager market. And people very quickly found it more effective than phone calls for most of the things they were making phone calls about. So there's a realization like, oh, this actually is what's going to happen, isn't it? Like if I'm supposed to meet you at Starbucks for coffee at 3, and I'm stuck in traffic, I'm going to be 10 minutes late. Instead of calling you and saying, Bo, I'm going to be 10 minutes late, I'll text you at the next stoplight, a lot easier. Um, just simple example, right? So, but it couldn't come out of the US because the US was too ingrained in the phone system, and the economics of utilizing a phone call, even a cell phone call, were not large enough to force a behavioral change to texting.
Hmm.
Okay, so another example, same time period, I found out that in Korea, again 2001 time period, that gaming, inter like gaming, interactive gaming, was so massive in Korea that there were already television stations dedicated 24 hours a day to computer gaming. 2001. In the US, we just had recently gotten uh, uh, we had the PlayStation, and Microsoft had their product, we were just like kind of and most people gaming at that time were sitting next to each other playing. Um, they weren't network connected, right?
Hmm.
They were just like, hey, I had two joysticks, Bo, come on over, we'll play games, right? I mean, that was whether you were on Xbox or PlayStation or whatever, So, um, but over there is completely different. So I went over there, like, what is going on? Well, the first thing was that people in Korea I'm generalizing, vast majority of people live in these big high rises. You ever been to like Seoul, Korea
I've
by
not.
chance?
Yeah.
Oh. So when you drive in from the airport, I've been there many times, you drive in from the airport, you just go for miles and miles and miles, and it's one 40-story apartment condo complex after another. Just boom, boom, boom. Like for miles. I'm not exaggerating, like just one after the other. Millions of people living in these things. Well, what Korea had done is they had brought fiber to those buildings and to every single condo and apartment in those complexes. So while the US was still in the transition from dial up to maybe very early, slow DSL cable stuff, they were already at super high speed internet. Like, and what had taken off was first person shooter games. And they became so popular, as I said, that there were TV stations dedicated to it, where much like we might watch a Monday Night Football, and there's a play-by-play guy and an analyst, and we're watching the game, and you've got these two or three people who are analyzing the game and telling you what's going on. They have the same thing in 2001 for computer games. And the best people in the world were making Michael Jordan kind of money. I'm not exaggerating. Michael Jordan kind of money. And they were mega stars. And so, while we in the West were still stuck on, we were playing like Madden, but it was like Madden NFL, but it was me against you.
Right.
That was it. They're out there in these, massive, either like single person shooter games, or large tournaments and like all this stuff that I would say maybe over the past 5 to 10 years has been very popular in the U.S. But they were a decade and a half ahead. So anyway, the reason I'm telling you those stories is that things are going to happen with Bitcoin like that. I don't know what they are. They're use cases, applications. Um, Something's going to happen in Zimbabwe, but it's more likely to happen, by the way, in Zimbabwe
Hmm.
or Albania or El Salvador, right? I mean, so don't be surprised, just like maybe we all have been to a certain degree, that you know El Salvador and Bhutan and places like that have been the early adopters and leading these things, because probably the same thing will happen here. That thing that really drives us to the next level, those applications, will probably come out of a weird place. Probably won't come out of San Francisco or Portland or Miami.
I tend to agree with you. It's you already said it, the people who need it, who have an economic reason to adopt something, usually have a much stronger incentive to innovate and really truly adopt than the people in a very wealthy country with a
Yeah,
relatively stable financial system. We're
yeah,
likely to be, on balance, the last people to really grasp it unless you're looking for it.
yeah. And necessity is the mother of invention, right? And that's a famous quote, and it's definitely true. Um, but what I will say too, though, is we do have to help those people. I think somehow. I'm not the right guy. That's probably not my mission. I help if I can, but how to get to these people and get them. Almost all of them have cell phones, smartphones. Like that's my. I think you may have met my. I think we met my wife in
Mhm.
D.C. but she's from the Philippines. In fact, we'll be she's leaving Sunday. I'll be following in a couple weeks for the holidays. And one of the things we have to do more with family and friends when we're there is push it. They are a little risk averse because money's precious, right? And they have this perception that I think is incorrect of it being risky. And so, we have to get them though. But I think once we get them using it, just like with texting, I'm sure it was hard to get them to get a cell phone and just, stop using the pager. But once they did, it killed the pager real quickly. So I think the same sort of thing will happen there. They need a little bit of a nudge to get comfortable.
So, one, you've been extremely generous with your time, and I want to respect how late it is for you right now. But to close us out, you said that is probably not your mission, is really finding that path to adoption for that type of person. But I am curious, what do you feel is your mission, and what do you want your impact on this network, this space, this movement to be?
Well, that's a big question. Well, I think I mentioned, I think I can play a role in making sure that the base layer does what it needs to do to let the rest of the world build on it. And I think that's what I'm here to do. And I guess secondarily would say that I've lived, I've been fortunate to live, right? I've lived through a lot of stuff and seen a lot of stuff, and I made a lot of mistakes. I've seen a lot of other people make mistakes, and I hope I can share some of whatever wisdom I've acquired to help this, because you can't. I think what we need, you need a combination. At one point, I was the young, aggressive innovator. I still try to be an innovator, but I was young and aggressive and reckless. And there's a beauty in that, and shit gets done when people behave that way. But there does need to be some counter to that, and keep people from going over a cliff. And hopefully I can help with that. And I guess the last thing is, I think I've done a good job over the last 4 decades of seeing over the horizon a little bit. Like we talked a lot about, block space and the implications of that. And hopefully I can give some people just a little bit more view of what's up there. And hopefully that will spark them to create something or do something that helps make the whole thing better.
I love that. Very noble. I know you have a lot of things that you work on. What would you like people to keep up with? You got Barefoot Mining, you got the Bitcoin Boomers, working on an article right now. How can people stay in touch, follow you, and engage with what you want them to see?
So my company is Barefoot Mining. You can find us at barefootmining.com. We unlike Abundant, our focus is more self-mining, but we will work with investors to develop sites. And we're always looking for energy too. So, yes, I know you are. So you can find me there. Find me on Twitter at boomer_BTC. I'm relatively active there. I have 2 shows. One is called The Bitcoin Boomers with Larry Lepard and Gary Leland. We've had 2 episodes out. It's distributed through BTC Sessions channel. And then when I have time, I have another show, which is just me doing monologue, which is called Old Man Yells. And I'm way overdue for some episodes. Hopefully I can find
That's
some
such a
time.
great title. Such a great title.
So thank you. And those are on all the, all the places you'd expect to find podcasts. So
Love it. Well, thank you for sharing your time with me, with the audience. I've really enjoyed the pleasure of getting to know you. I look forward to continuing that and continuing to hang out and see each other all over the world and just appreciate what you bring to the space. You've got a really unique way of showing up and calling it like you see it. I think it's very valuable. And I know if I'm one sample size or a sample size of one, there's many people like me who've been very positively influenced by you. I just want to say it's wonderful to have your influence in the space.
oh, well, thank you. That's very kind, Bo. That means a lot to me. And I always enjoy spending time with you and Christine Marie, and hopefully we'll see each other soon.
Looking forward to it. Thank you, Bob.
Thank you.